Ascot Resources is a golden triangle story that shows both sides of mining. World-class rocks and infrastructure, and the very real risk of execution, cost control, and capital structure breaking down at the worst possible time. This is a difficult episode because a lot of investors have been hurt here, but it's also one of the best case studies in the difference between geology and outcomes. Quick disclaimer, this channel is educational only and not investment advice. I focus on geology, history, resources, infrastructure, jurisdiction, management, and public disclosures. No price targets, no buy or sell calls. For this episode, we're back in British Columbia's Golden Triangle. This region has produced legendary deposits, but it's also known for brutal logistics, tough weather, and a cost structure that punishes weak execution. Even when you have road access and existing infrastructure, it's still not an easy place to build and operate a mine. This episode is a little bit more complicated since we're stepping away from simple exploration companies and into the realm of producing mines and the challenges faced with operations. Regionally, the Premier District is one of the most important historical mining camps in British Columbia. The original Premier mine dates back to the early 1900s and helped establish the Golden Triangle as a serious mining district. The key takeaway is that this camp is not theoretical. It has real historic production and a long track record of high-grade ore shoots. Ascot's modern story is essentially a restart story. The company controls the Premier Gold Project and the nearby Red Mountain Project, with a broader plan focused on feeding the Premier Mill from multiple deposits over time. Since the initial acquisition of the Premier mine, Ascot's early years focused on drilling and resource definition. In May 2020, Ascot filed a feasibility study outlining a restart plan at roughly 2,500 tonnes per day, with an 8-year mine life. That study formed the technical backbone of the investment thesis for years. The deposits that matter most to the Premier plan include Premier, Big Missouri, and Silvercoin. These deposits are typical of Golden Triangle systems, where mineralization occurs in discrete ore shoots rather than continuous blankets. That means mine sequencing, development timing, and grade control are not secondary considerations. They are central to whether the operation works. The Premier Gold Project is best described as a structurally controlled epithermal gold-silver system, typical of the Golden Triangle. Mineralization occurs in steeply dipping veins, stockworks, and breccia zones hosted within Hazelton Group volcanic and volcanic lastic rocks. Gold and silver are concentrated in discrete ore shoots controlled by faults and structural intersections, which can produce very high grades locally but often result in variable continuity. This deposit style is well proven historically, but it places a heavy burden on mine planning, development timing, and grade control to maintain consistent mill feed. Ascot has published NI 43101 mineral resource estimates covering multiple deposits at Premier, including Premier, Big Missouri, and Silvercoin. Based on the most recent consolidated resource update, the main Premier project hosts approximately 1.07 million ounces of gold and 4.67 million ounces of silver in the indicated category, with an additional 1.18 million ounces of gold and 4.67 million ounces of silver in the inferred category. The average grade at Premier in the indicated category is 8.01 grams per tonne gold and 35.1 grams per tonne silver. These resources formed the technical foundation for the restart and feasibility plans. But it's important to remember that resources are not reserves, and successful extraction depends on sequencing, access, costs, and execution, aligning in real time. Ascot made real progress toward production before the story turned. Following the 2020 feasibility study, the company advanced significant site infrastructure at the Premier Gold Project, including refurbishment of the Premier Mill, underground development at Big Missouri and Premier, camp upgrades, surface works, and power and access improvements. These were not paper milestones. They represented real capital being deployed on the ground. In early 2024, Ascot began commissioning activities at the Premier Mill, marking the transition from a development stage company into an operating one. In April 2024, the company announced its first gold pour, a milestone that symbolized years of work and significant investment finally reaching production. At that moment, Ascot joined the small group of juniors that successfully made the jump from restart plans to physical metal production in the Golden Triangle. Now let's talk about what went wrong, calmly and factually. In June 2025, Ascot announced that it would place the Premier Gold project on care and maintenance to preserve capital, after failing to reach a satisfactory cost agreement with its mining contractor. At the same time, the company launched a strategic review to evaluate options for moving forward. This was a major inflection point, effectively the moment the restart plan broke under real-world cost and execution pressure. This is where many long-term shareholders experienced the most damage. A shift from restart and ramp-up to care and maintenance and strategic review usually signals that the original operating and financing assumptions did not survive reality. The geology may still be there, but the business structure is no longer stable. Late 2025 marked a second turning point. The company disclosed how tight cash had become and that without financing it, might need to consider alternatives that included creditor protection type outcomes. That language signals survival level risk, not normal junior volatility. Then came the capital structure reset. Ascot implemented a 50-for-1 share consolidation in mid-December 2025 as part of a broader restructuring that included a rights offering and planned financings. A rollback like this doesn't create value. It's done to make a broken capital structure workable for new money. It is also psychologically devastating for long-term shareholders because it makes losses visible all at once, having said that the rollback may have been necessary to save the project. The difficulty and dilution risk of raising operational capital at low share prices is a problem many mining companies face. On December 30th, 2025, Ascot announced the closing of the first tranche of a private placement, along with major leadership changes and amendments with creditors and financing partners, including Nabari and Sprott. These moves were framed as stabilization measures, extending runway, restructuring obligations, and resetting leadership in an attempt to move forward. This brings us to the Sprott angle, which matters. In this case, Sprott is not just a shareholder. Sprott is a financing partner through streaming and royalty-style arrangements tied to future production. That means Sprott's outcome is linked to whether the mine restarts and generates payable metal. During restructuring, delivery terms can be amended and buyback windows extended, but streaming and royalty claims sit structurally above common equity. The December news release announced a significant leadership change. Jim Curry will be stepping down as president, CEO and director, replaced by Robert McLeod. Alex Morrison will join the board of directors as lead director, Ryan Wiemark, P. Eng will join as executive vice president, and Tally Barmash will join as corporate secretary. So how do we frame this fairly? Ascot is not a story where the rocks disappeared. It's a story where the project reached the hardest part of mining. The transition from development into stable operations, and the combination of contractor costs, schedule reality, and capital pressure forced a pause. That's painful, but it's also a real lesson. For many projects, risk peaks at first production, not discovery. From an infrastructure standpoint, Premier benefits from an existing mill, road access, proximity to Stewart, and a region with established mining history. These are real advantages. But the Golden Triangle still brings heavy precipitation, seasonal constraints, difficult ground conditions, and high labour and contractor costs. The costs and challenges of underground mining are especially high. Any restart here needs a cost structure that can survive reality, not just spreadsheets. Jurisdictionally, British Columbia is Tier 1, but not simple. The Premier project is located on Nisga'a Nation Treaty lands, which adds important engagement and agreement expectations. Environmental performance, water management, and operational discipline matter greatly here. On management, this episode is partly about accountability. Ascot executed significant leadership changes as part of its late 2025 restructuring. A charitable interpretation is that new leadership is necessary for a reset and improved execution. A critical interpretation is that leadership change can also bring uncertainty. How will they perform? For stock health, the signals are clear. A strategic review, care and maintenance, restructuring language, a major rollback, and survival financing all indicate that the original equity story failed. Any future upside now depends on whether the new structure can restart operations sustainably without repeating the same mistakes. So what should we watch going forward? First, the operating plan. Does the new team present a credible restart plan with realistic contractor costs, development sequencing, and ore sources that can feed the mill consistently? Second, the balance sheet. Watch how much capital is raised, how dilutive it is, and how creditor terms evolve. The first tranche of the financing raised $80.1 million. According to the December release, the proceeds from the first tranche will be used by the company to further develop the Premier Gold Mine and Red Mountain project and for general corporate purposes. Third, technical discipline. In narrow, chute-controlled systems, complexity kills schedules. Watch whether the company simplifies and focuses on higher confidence ore sources. Fourth, governance and transparency. Clear guidance, realistic timelines, and honest communication matter more here than promotional language. Ascot is ugly, but it's not hopeless. The Premier Camp has real geology and real history. The question is whether the company can rebuild around execution discipline, financing realism, and a capital structure that can survive the Golden Triangle. With $80 million in the bank, a tighter share structure, a new leadership team, a hungry mill and gold in the rocks, the story is not over. That's Ascot Resources and the Premier Gold Project, a high-potential district with a painful recent history, and one of the clearest Canadian examples that mining risk doesn't end at geology. Thanks for watching, and I'll see you in the next one. Let me know in the comments what project you would like to see next.